hereby call the second meeting of the Public Water and Wastewater Task Force to order. Madam Clerk, if you could, please call the roll. Oh, okay. And during the roll call, if you could please state whether you are in the room or appearing remotely. Madam Clerk.
Senator Smith. Senator.
I'm present at home.
Thank you. Senator Webb. Representative Lewis.
Present in person.
Representative Schmore.
Present in the annex.
Mr. Becker.
Present remotely.
Mrs. Halbub. Mr. Keats. Co-Chairman Gooch. And Chairman Senator Wheeler.
Present in the room. Thank you very much, Madam Clerk. If I could, I'd entertain a motion to approve the minutes of the July 13, 2020. I have a motion by Representative Lewis. Do I have a second?
Be a
Second
roll
from
call.
Co-Chairman Gooch. It'll be a roll call vote. Please call the roll, Madam Clerk.
Senator Smith.
Aye.
Senator Webb. Representative Lewis.
Yes.
Representative Schmore.
Yes.
Mr. Becker.
Yes.
Ms. Halbib. Mr. Keats. Senator Wheeler.
Yes.
And Representative Gooch.
Thank you, Madam
Motion
Clerk.
passes.
All right. I want to thank the members of the Kentucky Infrastructure Authority and the presenters here today. Obviously, one of the biggest issues we have with this task force is figuring out how to fund improvements to these water and wastewater systems. And so the staff and I were very interested in seeing what type of possibilities that were out there for municipalities and counties struggling with repairing their water and wastewater systems. So I want to thank you all for appearing here today, and I'll let you begin your presentation.
Okay. Thank you, Mr. Chairman. My name is Linda Britwell. I'm the Deputy Executive Director at the Kentucky Infrastructure Authority. With me today is Bill Pauley. He's our staff advisor. And Sandy Williams is from the Office of Financial Management. Is also making a presentation. We're going to tag team this a little bit today. So you sure will give me a second to share my screen. And I will bring up the presentation. Can everybody hear me okay?
Yes, we can hear you just fine. Thank you.
Good. So the Kentucky Infrastructure Authority, we are honored to be here today to talk to you a little bit about the funding options and availability for water and wastewater entities. And it's our job to keep working through that. Let me see if I can. I practiced my slideshow, but I did not practice it trying to do that remotely. So I may just have to figure out how to keep working through it. I may get my notes over to the side here. So can you all see okay if I leave it like that? Okay, so just to give you an overview, a reminder of the Kentucky Infrastructure Authority, our job is to help the citizens of the Commonwealth through providing subsidized and low-interest loans to public entities, primarily water and wastewater entities, and their primary purpose is for capital infrastructure. We have 11 board members. There are 5 ex officio members that are members of our board based on their positions that they hold within state government. And then there are 6 that are appointed by the governor on staggered terms. So we have a nice mix of engineers, finance, water representatives, water utility, wastewater utilities, and environmental experts. In addition to the board, we have a staff of 16 employees. And also we have a very, very valuable partnership with the 15 independent contractors of the area development district. If you will recall, the area development districts help us through the management of the water management councils that are required under state law for each district to have. They are representatives of water and wastewater utilities and county and city government officials. The primary goal of those water management councils is to look at priorities for infrastructure funding and moving those forward to help stay in contact with the utilities over the course of the years and just making sure. And then also the big thing for us is the management of the water and wastewater assets in the geospatial or the GIS system, the geospatial information system. The Kentucky Infrastructure Authority is required and charged by the legislature to have built and maintain this water resource information system. It is unique across the United States. We are the only state in the country that has all of our water and wastewater utilities with their facilities available through mapping electronically. It has helped us tremendously on planning and looking at the needs in the state. And the area development districts, in addition to managing the water management councils, also through their contract with us, help maintain that system by going and visiting every single utility to look at what has been updated, what has been replaced, are there new facilities that need to be added to the system. So it's really a huge management tool for us. The staff is primarily looking at applications for the loans that we make, the grants that we make. They go through a credit analysis. They present it to our board for approval. After the loans have been made, they help walk the borrower through the process, making sure that the draws are complete, that we keep the bank draws dispersed, and we're making sure that we're bringing in the federal grant money appropriately. We work on the compliance. Federal money, as you know, has a number of compliance issues that always comes with it, and we are answerable to the EPA on making sure that the money is being used appropriately and is being processed appropriately. In addition, the staff helps with the issuance of bonds and any water asset management. We do have the geospatial information system we have 3 folks on staff that help maintain that as well. Just to talk a little bit about what's going on today, we are looking at a number of challenges with COVID and our responses. One of the big things has been the document submissions. As you can imagine, essentially a bank with a lot of loans, we do require a lot of document submissions and for our federal compliance. We have moved all of our storage to electronic prior to this, but also now all of our document submissions are electronic. We've gone through some digital signature procedures that are allowing us to function completely remotely and work with the utilities and the ads remotely. Our board meetings are currently being held via Zoom. The board meetings are available to view live and by going into the website. We are meeting with the utilities on a regular basis through the Water Management Council and through the individual borrowers, again, remotely. This has been a tremendous help to us. I think it's been a little bit of a struggle over the years, sometimes with borrowers that are having to come from far eastern Kentucky and far western Kentucky, that this has really provided a new resource and a new tool for us to use on reaching everyone across the state. We do have a few grants that are available in the state of Kentucky. The Kentucky Infrastructure Authority itself is looking at a small and disadvantaged community water system grant through the EPA. It's $698,000. It's a fairly small, it's new. We don't know whether it's a one-time deal, but we are exploring every option that comes through the EPA. In addition to that, the Kentucky Department for Local Government provides a number of grant opportunities through the Appalachian Regional Commission. They have both area development and the Distressed Counties Infrastructure Grant Program. The community development block grants are also administered through the Kentucky Department for Local Government. So those are opportunities. Although they are not nearly as big as the needs across the state, there are some opportunities for grants still out there. Oh, pardon me. I don't know what I did there. let's keep moving on. So the grants, there are some grants through the Energy and Environment Cabinet, the Abandoned Mines, Lands, the Waterline Grant Program through the Abandoned Mine Lands. That's a program that's administered primarily for communities and households whose drinking water has been affected through previous coal mining activities. There are also a number of pilot programs that are run through AML. The AML pilot programs are generally geared towards looking at non-traditional ways to address issues that have arisen through the abandoned mines. Some of these include extending water lines, treatment processes. This year, they are looking at some economic and community development for just using the systems and using the lands again. In addition to that, the EPA has a couple of programs that run grants through the Public Clean Water Section 319. That's the non-source point pollution program, and then also the Brownfields program. That's not specific for AML. That's just for any assessment or revitalization of a brownfield or a contaminated land area. In addition to the US EPA and the brownfields, there are a few grant programs through the Kentucky Economic Development Cabinet. We partner with them from time to time. The Kentucky Department of Transportation, if they are doing a project that is affecting utilities, we can look at partnering with them on the grants. U.S. Army Corps of Engineers, and then also the Delta Regional Authority that's run through the Department for Local Governments as well for our utilities out in the western end of the state. Oh, I did it again. Okay, so loans. And that's what we do primarily as a business at the Kentucky Infrastructure Authority. We are looking, in addition to us, there are a number of other loan programs. The USDA or the US EPA has some direct loan programs. The Water Infrastructure Finance and Innovation Act, which is allowing for loan programs through the federal government, through the US EPA, and I'll talk a little bit more about that. The Brownfields also offers some loan programs. The National Rural Water Association, or locally the Kentucky Rural Water Association, through their finance arm, have a loan program, generally for short-term financing, but they do have some other opportunities there. Then the RCAP, or the Rural Community Assistance Partnership, that's part of the Rural Development Program. And then the Kentucky Association of Counties has a loan program as well. For the Water Infrastructure Finance and Innovation Act through the US EPA, some of you all may have heard about this recently. They have been up and running through it since 2014, but in July of this year, they announced an additional $6 billion of funding. Now, what they're looking at through the federal government is a minimum project funding of $20 million. They can loan to an individual agency or a financing agency. For an individual, they're looking at projects that are regionally significant. The US EPA through the WIFIA program is looking at 49% project funding loan, 51% must be through other sources, although the other source can be the state revolving fund through the local agency such as the KIA. So this is something just in the state of Kentucky we're continuing to look at. We don't have a lot of borrowers that are coming in for those size projects. The rates on those, there are some fairly significant threshold costs for the application. The rates on it are equal to the Treasury at the time of the closing. So the grants and loans through the rural development, the loan terms generally are up to 40 years. Right now, they have dropped their interest rates down from rural development down to 1.875% at a market rate. They do have some intermediate loans on 1.5% and a poverty level at 1.125%. I'll be honest, RD does have quite a bit more grant money available to them as part of their loan program. In the past few years, their interest rates have been slightly higher than KIA, so we certainly understand and respect our borrowers looking at all their options for what's the most cost effective for their communities and the feasibility for their communities. Of course, the state office is in Lexington. Hilda Legg, if you know Hilda, is the state director. She does a fantastic job with her team. The area that covers Frankfurt particularly is the office in Shelbyville with Greg Pridemore. So we work with the RD folks across the state on a number of different projects. To give you a little more information about the KIA and the historical funding, I'm not sure that everyone is fully aware of the size of the KIA. Over the years, we've provided almost $2 billion of funding for approximately 550 projects, wastewater projects and water projects. In addition to that, $572 million for approximately 250 drinking water projects, $159 million for infrastructure loans, and $123 million in government agency loans. And these are, the last two are state-funded programs that we operate as well, in addition to the federal programs. Just to recap, currently the Kentucky Infrastructure Authority has about $1.6 billion in loan assets through our program. So if we were a bank, one of our former board members told us we would be the 5th largest bank in the state of Kentucky. So we do have a significant impact on the infrastructure in the state and the water and wastewater utilities. Our current funding that's available for 2021, which is our current fiscal year that we started July 1st, we have $98 million available for wastewater in our stormwater fund. Of that, $20 million is part of the capitalization grant coming from the EPA. The rest of it is coming through either repayments or commitments that have been made previously that have gone unused. This year, in addition to that, we have $67 million available to loan for out of our drinking water fund, which is separate. Again, the EPA grant this year is $18 million. The rest of it is coming through repayments. Part of that is just because the drinking water loan program is not as old as the clean water program, so the repayments just aren't as high yet. Out of the infrastructure fund, right now we have about $1 million left in this fiscal year. We have committed significantly. It's purely a first come, first served basis. And then into the government agencies fund, we're under $1 million available to us. Our loan payments, repayments are made twice a year. They're semi-annual. They come in at June 1st and December 1st. And then obviously, once the repayments are made in December, there's sometimes some additional monies available in those infrastructure funds. So our KIA funding determination for clean water, the projects are ranked by the Division of Water. They are based on a priority guidance that's published every year. So utilities know up front when they're making an application how the ranking system is going to work. The weight is given particularly to projects that are helping to meet compliance. So it's such as if the system has a consent decree through the federal EPA or notice of violations or a memorandum of agreement with the state Division of Water. There's also weight given to efficiencies or elimination of package plans. So we're really looking at the priorities of the state and the guidance and what we're trying to do with helping utilities across the state. For the clean water program, you can actually take a project out of order under the EPA rules for the program. For drinking water, you cannot. Once the projects are ranked, they have to go in that order. And the clean water is primarily projects are taken out of order only if there is a project of high significance or priority for the state that for whatever reason might not have ranked as high. Obviously, if you're looking at your priority rankings, they should match up with what your policy issues are, and your ranking should be fairly close. And that's what happens with us each year. Our program stays pretty close to the priority list. Sometimes if we have a small program or a small project and a small amount of dollars left, we will look at skipping down a project. But for the most part, they go strictly in the order that they're ranked. Again, in drinking water, the projects are ranked by the Division of Water. They're based on the priority guidance that's published every year, so the utilities know what we're looking for. The weight is given, again, to projects that are helping to meet compliance, that are looking at efficiencies, and are looking at consolidation. That doesn't mean that there aren't other factors that are included. Replacement work is a strong component of the priority guidance, but We are looking at heavily on consolidation, elimination of packaged plants in clean water, and obviously meeting compliance for our utilities. The subsidization for the small and disadvantaged communities is a goal of the SRF programs under KIA. And in addition to the low interest loans that all of the utilities get, the selection based on the median household income for a community can help give them additional subsidization. One, we have a small amount of grant opportunities for us called principal forgiveness. That means that if a community comes in and they qualify and they are ranked in a certain, where they would be getting a loan, they are allowed to, if their MHI is below 80%, we can provide principal forgiveness for 50% up to $1 million on new construction loans. In addition to that, even if they, for whatever reason, because we only have a small amount, they were not able to get principal forgiveness. In addition to that, our standard interest rate currently is, well, it was 2.5, we've dropped it. We are looking about whether our non-standard rates, which are 1.5 and 0.25, whether those are still appropriate with the changes in the market conditions. And that's something that our board is looking at a little closer. Just to give you an idea, though, of the $98 million sounds like a lot of money. $67 million sounds like a lot of money for drinking water, but I hope everybody on this task force understands that's not nearly enough for what we're facing as a state across the Commonwealth on infrastructure needs. We asked as part of, it looks like early during the COVID situation, we asked back in the spring, the ad districts as part of their water management councils to reach out to the utilities and just say, hey, if you had, what other infrastructure projects do you have that you could be ready to move forward within the next 2 years if there was an opportunity for some additional funding through the federal government? We had a reply of over 1,000 wastewater projects estimated at $892 million. 475 drinking water projects estimated at $475 million. Now, again, does this mean that all of the systems are going to fail tomorrow without that? No, absolutely not. But when we talk to them about what their needs are, the short-term needs, this isn't something that needs to be done in the next 20 years. This is something that they are looking at, their short-term needs over the next 2, 3, 5 years. We're talking about a significant amount of infrastructure needs that are being required by our utilities across the state. Looking at the trends and based on the current KIA payment, the repayment for is projected for December. So right now, under 5 borrowers have been struggling with payments out of the 490 outstanding loans that we have. So our borrowers are very attentive to paying back the loans. We work with them on what their rates need to be financially viable, not just for paying off the loans, but to make sure they're maintaining the systems as they need to over the years and meeting the operating requirement. The next payments for our borrowers for our loans are due December 1st. Most have identified that the revenues are sufficient to make the next payment. And we are keeping an eye on this, and we're trying to stay in contact with the utilities through the ads and the water management councils, just as we know the COVID-19 crisis ongoing and that the citizens are having problems. If they're having problems paying their bills, then the utilities have problems having with enough revenue, and then they're looking at what other changes they need to make. So moving forward, our questions and expectations, will there be a additional federal assistance? When we made the request in the spring, we were hearing out of Washington that there would be some additional federal assistance that might help with the economy on the infrastructure, similar to what happened during the 2007 to 2009 time period. To date, that has not materialized. That may still come forward at a future date, but that's obviously a big question as part of our infrastructure portfolio. Also, will there be additional funding options available locally? Are there other things, are there other opportunities for the local? And then we're monitoring the COVID-19 impacts on utility revenues and payments. So that was all that I had as part of my presentation. I happy to let Sandy speak unless I've missed anything, Bill, that you want to add, and we can go through Sandy's presentation. And if you all have any questions for us, we'll be happy to answer them.
One thing I would like to add is that it's fantastic that so few of our borrowers are having problems making the payments, and then payments aren't due, from what I understand, for another 6 months. A lot can happen in that time, but I think it really speaks to how well this program has worked, that we've had no defaults on any KIA loans so far. So this has been a very successful program for the Commonwealth. I would like to note, though, at the DLG, we have had some counties call, and their municipal water lines are missing some payments now, and they're wondering what's going to happen. As Ms. Bridwell mentioned, we are looking to see what is going to happen with federal funds, how those are going to be laid out, what restrictions are going to be put on those, and unfortunately, only time will tell.
Okay, Sandy, it's your turn.
Hi, good afternoon. Can everyone hear me?
Yeah, we can hear you. Well, before we move on, I think Representative Lewis may have had a question for Mr. Polly and Ms. Bridewell. Did you have a question real quick, Representative Lewis?
Yes, Mr. Chairman, thank you. A couple, if you'll indulge me. Mrs. Bridwell, you know, it's a privilege being on this task force. I serve with several people on this task force from the Eastern Kentucky communities who may be facing declining populations, higher unemployment rates, higher tax rates. And looking over your slides here, has KIA considered removing the cap of 50% up to $1 million on more expensive compliance-related construction projects? I know we talked about, you know, the federal priority being compliance, and in talking with some of my water districts, I worry that they will not be able to afford some of these projects, and you know, extending the cap would help them tremendously.
To be honest with you, Representative, we have not to date. The federal guidelines restrict how much that we are able to use out of subsidization out of the CAP grant. That's certainly something that we can take back to the board to look at. Obviously, the more that we are subsidizing, the less we have available to loan back out and revolve the funds around. But we are certainly willing to bring it back up with the board and look out of the repayment funds if there's an opportunity to provide additional cap money out of, or principal forgiveness out of that.
Sure. And one other question, if you'll indulge me. Another focus that we had, you know, last year was performance benchmarks. And, you know, in working with KIA in the past, I know we had several discussions on this task force about technical, financial, and performance benchmarks being put in place to making sure that, you know, if we are issuing grants to these water districts, that they're being used for what they're intended to, and it's not so much, you know, literally a leaky bucket, so to speak. But what benchmarks would KIA suggest being considered if we brought this back up in this task force?
Well, the first one is the financial performance, and that's one that I think everybody on the task force, I hope, is aware of. And as you just mentioned, I mean, each utility has its own challenges. As we work through auditing, each utility or each borrower provides their audit to us every single year. We do look through those. We look at whether they're in compliance with the loans, not just when they're coming in and applying for a loan, but ongoing. And one of the things that we're looking at is really what can we do when they're out of compliance? If for whatever reason they haven't raised the rates and their financial situation is not where it needs to be, what can we do to help them? And is it something that I think that whether or not the task force wants to take up on providing some authority, whether it's within the Division of Water. I know the PSC has their ability to look at it, but for other utilities, whether it's something they need to be looking for. And I know I saw Jory unmute himself, and I'm hoping that he's going to talk a little bit more about if if you all would indulge him, we are working with the Division of Water on the technical and managerial capacity with utilities and what kind of performance benchmarks that we're looking at for those. And we're working through redrafting, or I guess editing the requirements there. So Jory, do you want to add anything on that? Not to put you on the spot.
Oh, well, that's all right. Yeah, so, I mean, I think that Linda's right. I mean, the good thing we have with regard to the borrowers from the revolving fund is that we do have expectation levels like the debt to income ratio and things like that that help keep the utilities on track and make sure that they are solvent when it comes to borrowing the money. I think an ongoing challenge is for making sure that utilities that aren't borrowers of the fund, that we try to get a handle on helping to direct and make sure that they are healthy financially, and that has not been a angle, or it has not been an aspect of utility management or regulation by the Division of Water. That's not something that we have directly focused on in past times. We have the capacity development program. We have the ability to ask financial and managerial questions of facilities, but there's not really, how we go about assisting facilities that are either currently lacking capacity or who may be dangerously close to lacking capacity, where the next technical disaster, if you will, or the next ice storm or problem, knocks them into a non-compliant situation. I mean, it's trying to find ways to prevent that. So, I mean, all I can say definitively is yeah, we have definitely continued to look at that with KIA and ultimately with, particularly again at those facilities that are not borrowers of KIA, the larger regulated universe under the Safe Drinking Water Act, and even to some degree under the Clean Water Act, although planning occurs somewhat differently for those two types of utilities. So it's certainly something that I picked up on as an observer of the last task force, and something we're going to focus on, and as well as I think Linda mentioned, we're starting to take a heavy look at the replacement of infrastructure. Not to say that we don't wish that we use AML funds or other funds to extend services where services don't exist or where they're failing septic, but we are starting to, I think, as we look forward to the 22 funding cycle and creating the criteria that Linda was talking about with regard to prioritization, we're looking at the aging infrastructure and the existing infrastructure as a focal point, and perhaps having more points awarded to those facilities that do rehabilitation type work. So, Linda, I hope that helped you out. Not having anything prepared here.
No, that's something we can certainly provide back to the task force if you would like to have some specific benchmarks that we would have in mind. We know what we're looking at financially, but we certainly would be happy to provide some specifics on what we think would be helpful.
And the division would like to work on that as well.
Thank you all so much. Jumping back real quick, and one last question, and I'll get out of your hair. Based on these benchmarks, let's say we work something out that everybody can agree to. Would KIA be willing to look at maybe principal forgiveness on meeting these benchmarks? Is that something we could look at?
Oh, I think absolutely. I mean, we would love to have an opportunity to further reward, so to speak. I mean, it's an amazing what incentive it is when you get an an opportunity for principal forgiveness. And so, you know, anytime that we can reward utilities that are doing what they're supposed to be doing financially, technically, managerial, that would, I think, be something that the KIA would really like to have to offer.
Thank you.
We'll let our next presenter proceed now.
Thank you very much. I'm hoping you can see my screen. And good afternoon to everyone. I'm Sandy Williams, Deputy Executive Director for the Office of Financial Management in the Finance Administration Cabinet. And I would like to thank you for allowing me the opportunity to speak about two things that I'm passionate about: municipal bonds and serving the citizens of the Commonwealth by providing adequate water and wastewater facilities. Linda has provided an excellent overview of potential financing sources offered through both state and federal programs. And these sources often provide the lowest cost of capital, but they do tend to have limits, as Linda mentioned, on the amount of capital that is available. And municipal bonds could be used by some utilities, hopefully to fill in some of those funding gaps. Today, I would like to discuss the three basic types of bond financing options, the typical timeline for getting those bonds issued, who the financing team members are and what they do, and finally, a few items to consider when making the decision to issue bonds. When considering revenue bonds, this option is generally defined by the source of repayment used to pay the debt service. So revenue bonds are secured by revenues paid by the ratepayers for their water or wastewater service. And I would like to point out that these bonds would be the sole obligation of the municipality that issues them and not an obligation of the state. Often, revenue bonds have covenants or other promises made to the bondholders in addition to the promise to repay the debt. And those covenants are in place to protect the bondholders, and they are restrictive to the issuer. So rate covenants provide guidelines for rates and charges. An additional bonds test would set a limit for the amount of bonds the utility could issue in the future. And some covenants like debt service reserve fund or a rate stabilization fund, those could limit what a utility could do with their cash. So most often, those municipal bonds are issued on a tax exempt basis for a 20-year term, and they do require a credit rating. So that would be obtained from Moody's, S&P, and Fitch. And how they rate revenue bonds, they look at the strength of the underlying ratepayers, and they look at factors like the total number of residential customers or the strength of the industrial customers that make up that customer mix. They also take into consideration the amount of debt the utility or municipality intends to issue in the relatively near future. Revenue bonds, they can be issued, they can be publicly offered or privately placed. Looking at general obligation or GO bonds, those are secured by the general taxing power of the municipality, and they are the sole obligation of that municipality, and again, not an obligation of the state. Typically, GO bonds don't have restrictive covenants. They are issued on a tax-exempt basis for a 20-year term, and they also require a credit rating. Moody's, S&P, and Fitch rate the GO bonds on the strength of the municipality, and they look at factors like budgetary performance, budgetary flexibility, liquidity, and the amount of outstanding debt and contingent liabilities. General obligation bonds are typically publicly offered and competitively bid. A third option for a municipality is to issue short-term notes, called bond anticipation notes or bands, what we call them, associated usually with a U.S. Rural Development loan. Bans are typically structured for a term of 18 to 24 months, and they may be general obligation or revenue. The permanent financing extends the total repayment term for the ban and the permanent financing to 40 years. When a utility or municipality is looking at a timeline for bond financing, some of the factors that should be considered is the time for procurement of the financing team, and then add in at least 3 to 4 months after the team's in place to price the deal, and possibly up to an additional month to close and actually have the funds in hand. Here on the screen, you can see a list of the possible financing team members. I won't read those to you. And I won't read the responsibilities of each of the team members, but I would like to point out just a few nuances. When local municipal bonds are issued, the Department for Local Government may be involved in the approval process, depending on who the issuer is. And looking at bond counsel, they represent the issuer and they assure compliance with tax law. And the underwriters counsel represents the underwriter and they assure compliance with the securities laws. Bond insurers may be used just depending upon market conditions. And again, the rating analyst with one of the 3 rating agencies would need to be involved. And then financial advisors are used when bonds are competitively bid. And then finally, the trustee represents the interest of the bondholders and makes sure that all of the payments get made. So why would a utility want to issue bonds? So a few things to consider. There may not be enough funds available from less expensive sources. So the sources that Linda talked about, typically through subsidies that are offered or principal forgiveness, the ultimate cost of capital is less than going through and issuing open market securities. Also, the restrictions for bonds may be less onerous than a federal program. So even though the program may have a cheaper cost of capital, the bonds may ultimately have fewer restrictions to deal with long term. And then sometimes it can take less time to issue bonds. Those are my prepared comments for today. Thank you for your time and attention, and I would be happy to try and answer any questions.
I guess I would have a maybe question for all the presenters. If I was in charge hypothetically of one of these municipal water systems or county water systems in a struggling district or a struggling area, what generally is the best procedure to go through in order to obtain funding at the lowest cost to the residents? Is there a general pattern that you would recommend or place to go first?
Place to go first. I would say, well, first of all, they need to look at, do they have their audits up to date? Because I don't think any of us are able to, not RCAP, not RD, not the KIA, nobody's going to be able to talk to them or work with them a whole lot if they don't have their audits at least up to date. They may not like the picture that it shows, but that's certainly something that we are trying to emphasize with our borrowers and across the state. There are some assistance programs. I know the rural water team is really good at helping find the best solutions, whether it be through us or RD. Those are probably the 2 primary focus, but certainly if someone is interested, as Sandy talked about, if you're a rural community and Bonds may not be, the individual bonds may not be the best way to go, but there may be some opportunity about a bundled bond through another program. So probably what they need to do is reach out to one of us. They either need to reach out to the KIA or reach out to the rural development team and let them start working with the utility. The Public Service Commission also has some resources that they can help them on, okay, how do your financials look? I know that scares a lot of the water districts, but the team at the Public Service Commission is also, their goal is to make sure the citizens of the Commonwealth have adequate utilities, and that's what we're all here to help do. So, but certainly they can contact us if you have someone in your district that needs some help. We're happy to talk to them.
Okay, I guess if no one else has any questions today, thank you very much for the information. It was very enlightening on the various funding sources that are available to accomplish some of these goals of, I think, providing clean water and a clean environment to the citizens throughout our Commonwealth. And I want to thank you all for taking your time to put together these presentations and to be here with us today. So unless anybody else has any questions, the second meeting of the task force on the water and wastewater systems is adjourned.